Hello and welcome from the most easterly part in Australia, Byron Bay. My name is Martin Kratke and I'm very much looking forward to cover with you financial analysis of listed companies in Power BI. Initially, just a few words about myself. I'm the co-founder of two organizations, Managility, a specialist provider for Power BI solutions and the Microsoft Analysis platform, and Actaris, a company that specializes in add-on solutions for Power BI, particularly around data integration, automating Power BI processes, and planning. I've got 20 years of implementing analytics and planning projects. I've worked with Power BI from the start, and I have at the moment 9 Power BI showcases listed in the partner showcase. If you're interested, have a look. I would love to connect with you. My details are here on LinkedIn or on Twitter if you like. So our topic today is financial data analysis for listed companies, and that involves a few different areas. The first one is getting to the data. So how can you get the data to do the financial analysis? And I will cover a few options, in particular how you can get it from web sources. The second thing is typically the data that you get is not in the best state to realize your analysis, so you need to get involved in modeling. So we cover that in a few details around dimensional modeling. Then we move on to financial metrics. So again, with the data, you want to refine it with adding financial metrics. In our case, we will focus on valuations, so the discounted cash flow method, to allow you to value a company. And then finally, how can you best present the information, and we cover a few reporting considerations there. So our first topic is data sourcing, and so there's now of course different options. So we can use public websites, which I will cover in detail, so organizations that publish financial information about listed companies. You can get it from internal sources. So for example, if you want to analyze or do financial analysis with your own companies or subsidiaries, you can access your own data sources, or you can use external data providers that specialize in this area. We won't cover the two other methods. That's typically very specific to the particular use case, but look at the web scraping. So with web scraping, we will look at what are the options and how can you do it. How can you accomplish multi-page load? So what's a little bit different than to the normal things that you likely know already from Power BI, of course, how you can use web sources, how you can use a table. But I want to show you a few more advanced ways how you can implement the web scraping or using web tables for multiple companies. So very often in financial analysis you want to cover multiple companies. So here we will cover how you can do the web scraping or the web tables in Power BI for multiple organizations. Then we look at the optimal structure of how you should structure the data, and this brings us to the modeling as well, and then also the transformations. So before I go into these functions, let's have a look at the model directly. This is probably more interesting, and also in the end where we want to get to. So at the end of the session, what I would like to cover, or what I would like to enable you to, is to have financial analysis similar to the one I have in place here. I'm just doing the refresh of my tables. In this case, you can see here I have loaded data from 3 companies: Microsoft, McAfee, and Adobe. And so the user can choose either the entire group of companies or a particular company. They can choose a particular time slicer. They can see the report. I just saw that the loading went through successful, so all my methods are working successful. So what I'm showing you is actually really producing the results we want. So we have here the financial report, whatever you select. So in this case here we're using the companies as in the columns. And then we have the current period of the data, percentage of revenue, the prior year, and then we're showing a variance here as well. What you already see here is we're using proper financial formatting and subtotal calculations. And there's now a variety of ways to do this. I will cover a few, but we'll get to that when we do the reporting. So you can see here we've got the proper subtotal calculations, we've got the right formatting as well. And this goes down to the net income, and then we have a variety of metrics like shareholdings and EPS and a lot of other metrics that you typically need for financial analysis. We're using things here like custom tooltips. So if I move the mouse pointer to a particular point, I can see the details behind this particular measure. This works obviously on the grouping, so we have a grouping here of revenue, cost of goods sold and expense accounts. I can go to the detail, I can move the mouse pointer there and then see these details. So here we see a breakdown of that particular company for a period, and I can see the details here. This is really just a very simple one. Normally what potentially will help you here is to have charts as well in the tooltip, but it's just the principle that I would recommend to use custom tooltips here for the analysis. What we then see here is an overview now to allow the user to immediately get a trend. So I have here the core financial statement components, revenue, cost of goods sold, expenses, and income, non-operating income and expenses. So at a glance I can see here what's the trend. So in this case here we see Adobe is looking pretty good, so they're moving up revenue wise. The expenses are going up a fair bit as well. Cost of goods sold go up as well. Non-operating costs are irrelevant here for this organization. So this data is now nice, but obviously it is also good if you can see where is this coming from. So what we're doing here as well, we've implemented the link back to the data. So for example, if you look here at Adobe and I want to see now the details, I can just click here, and now I get the source of my data here. And this is where we will get to in a few minutes. How can you load the data from here for all the relevant companies in one go into Power BI. So we see here the same metrics that you have here on the left side are here as well. We see we structure them a little bit better here, so we're adding the grouping as well. So the matching column here for this one, we filtered this on 2020, is this one here. So we see the 1268 matches the data here. So that's always a good thing, that you see how that your data is that you have in Power BI is really correct. So these are the financials, but for one of our topics like the valuation of companies, we will also need the cash flow statement. So that's another table here where we see now the cash components, which is the key metric for the free cash flow they will need for the valuation, for the company valuation. We can get that as well. So we will be, and again that comes back to how to handle multiple loads from source web tables. We will cover that very soon when we look at how have we done all this. So this is just the initial overview of the financials, and then the other one is the cash flow. Sorry, this one is the cash flow here. So similar than what you've seen before. So now a lot of cash flow metrics, also scraped from the web. Multiple companies, you can group them to industries. And here we see now the valuations. So I see according to this, let's for example select a particular one. So we see according to my model for the discounted cash flow valuation, Adobe is worth $303 billion. We can see how close this is to the current valuation. So for example, if I start a new browser now, so to the market cap, and that's obviously then always the comparison. You want to see, is the share market valuing the company the same way as the financials do. So if I look here now for Adobe market cap today, so I can see the market cap based on the share price is 215 billion. So I can see here my model is a little bit more optimistic than the share market. And this obviously is never a exact science like any social science. There's a lot of ways to skin the cats. There's parameters involved here. And based on the changing of these parameters, you can really significantly influence outcomes. But I think what we are doing here will give you a pretty good overall outcome. But the factors that we're using here should be adjusted to the particular requirement at hand. So this is not setting in concrete. But this is now where we want to get to. The reports, the analysis features here, the link back to the data, and then the valuation calculations for the value of a particular company. So for example, if we check this now for Microsoft, let's see how that changes. That's pretty close. Typically, people say Microsoft is a 2 trillion company. That is the value that we have here. So that's pretty close to the market value. So our calculation here brings us pretty close to the 2 trillion that Microsoft is generally valued at. So this is the outcome, but how do we get to this? And to do these page loads, we're using initially a reference to the website. So you can see here the website that we've loaded is Reuters. So we have a URL here for Reuters companies, and then based on the particular company, we have here what's commonly called the ticker symbol. So this is how the organization is identified. Let me make this a bit larger maybe. So that you see here the URL, and that is always a standardized thing. So it's always this initial part of the URL, adbe.org for that company, and then the financials, income statement, annual. So that would get us the financials that I've just shown you before. So this is what we want to get from the website. And a key thing here now is to use the right ways of how to get to it. And unfortunately, when you do this out of the box in Power BI, it's not the right way. And why is this relevant, the right way? If you don't do this the right way, so using a relative path option where you use a syntax like this, so we have the fixed part with the companies, and then we have the variable part with the what's called the ticker symbol, so the name of the company, and then the rest of the path. Then this means you don't have to use a gateway when you publish it to the Power BI web. If you don't do this that way, so if you do it like the out of the box way, and let's look at this quickly. So if I go here now to, so this is now the my data sources in Power Query, so how I'm getting to this. But let's say we start this now from scratch. We want to have a new web source. We want to use a web data source. Now I'm putting in the URL. So I say, okay, give me this particular financial statement. And then click on OK. So Microsoft Power Query is going out to this URL that I've provided. And it will list now the particular tables. So I can see I've got 4 tables now. From this alone, I wouldn't really see if this is the right information. So here, but here we see table 1 looks good. So table 1 is the one that has the income statement metrics, and then it has a few columns here for the period. So you see this December 21, November 20, so this is always an annual result for 1 year. So that looks pretty good. Let's get this. And now we get the data here. So that looks in general okay. And there's of course a lot of transformations missing. We see that the header is not coming okay and so on. But if you would publish that to the Power BI service with a variable, so let's say you're using here, because as we want to do this for multiple companies, we want to use a variable here. So this is not always ADBE or Q, so in this case Adobe, but we want to do this for multiple companies. As we discussed, this was one of the key things that we want to achieve. We want to run this for multiple companies at the same time. Of course, what you could do is you could do what I've just done and say, okay, I'm doing this for Adobe, I'm doing another one for Microsoft, and I'm doing another one for Oracle, but that's obviously not very effective. So I want to show you a way how you can do this in one go for a lot of companies. So this is already something that you have to keep in mind. So if I go now to the solution, to my solution that works, here also a big shout out to Imke Feldman. Some of you might know it. So she's one of the absolute M gurus, and she helped me a little bit with a few questions that I had. So thanks, in case you watch this, Imke, thank you very much for helping us there. Also, if anyone is interested, just go to her website. It's called BI Content. I will give you a few links in this session of people that I think and very helpful resources, and that's definitely a very good one. So Imke's website, the BI Content, and she's the absolute master in M, and she helped a lot with this what I'm covering here. So that was Imke. So back to our Power Query results. As you can see here, I'm immediately using the advanced editor because what we are doing here requires unfortunately editing. So if you do it in the automated way, as I mentioned before, you wouldn't get the result that you want. So I have to do this here in the advanced editor. So we see here now, this is one part of my Power Query query. I have one for the actual financials, so this returns the actual result. So you can see this is now properly formatted in the way I need it in my Power BI dataset. So I have here all the metrics, I have the dates, I have the value, I have the ticker, as we mentioned before, so that identifies the company. That's what you typically use to get the data from a URL. I have then groupings here, so that we get the hierarchies in the financial statements that you saw before, that I have a drill down from revenue to the revenue accounts, from expenses to the expense account, something I didn't have in the in this web source. And then I have a few other things that we generally recommend for this kind of analysis. So we have an option of how to treat the sign. So when you add this up to groups, is this added with a positive sign or a negative sign? This is relevant if you do calculations. So in this case, for the revenues, it's all positive. For costs, it's negative for the expenses. And then I have also groupings here. So to achieve the sorting that you want. So for example, if I then have my financial statements, so let's look at this quickly. I can't go back now because I have let me just close this, I'll open it again in a sec. So if we look at the reports, we have now this properly sorted. So revenue, expenses, non-operating, net income, and so on. And this is the way to achieve it. Because Power BI wouldn't, of course, know it. If you do it alphabetically, that wouldn't help you. If you do it by value, in this case, it might even be okay, but that's unfortunately not reliable. So you have to manage the sorting, and that's what we're doing here in this column here with the sort order that is then applied as a column by sort order in Power BI. So I'm sorting the account groups by that column. And then I have the resulting calculation. So here I'm just multiplying the value times the sign. So you can see I'm getting the revenue positive, whereas I'm getting the cost negative. So for my calculation, that is helpful if I do it that way. And then finally, I'm also including the link here back to this particular web source that I'm using here. So you saw when I clicked on this, I'm getting the respective report, so I can compare the information as well and see where it's really coming from. So to put this URL back in there helps me to achieve this, because then in the end it's a very simple thing in Power BI. You just point to this particular column, so you point to the report link, make this a URL, so just make this a data category URL, and then this allows you to have the drill to the underlying website. So a very simple way to do this, and this is just a normal table visual in Power BI. So to handle these groupings and the signs and so on, you have now different options. You can use Excel sheets. What I've done here is I'm using a relational table where I'm handling all these things, and the beauty here is I can edit this directly in Excel. So if I click here, I could now, for example, change that I want to have a hierarchy here that's different to what I'm having here. I want to edit the sign, or I want to change the order, and I can edit directly here. I'm not telling you how I'm doing this, but if you look at our website, you can see it. But you can do exactly the same thing if you have an Excel sheet where you just copy the metrics that you have that are coming from the source system. So what I'm already doing here is I'm getting this table, and then we just have a distinct filter. So I'm getting only the distinct metrics, so for the particular revenue, cost, expenses, cash flow items, and so on that I'm getting from the website. You can do the same thing in Excel. So you have here the metrics, and you just add in Excel, whatever the other things are. Then you can edit it in Excel, and just need to do the refresh. That obviously has some limitations, but it will work as well. So this is how I have achieved this these calculations that I've just shown you before. So I'm just merging the table where I'm editing the data. So just the table that I'm editing is here, and I can edit it in Power BI. And I'm just merging that with the what's coming from the web URL. As you can see, that's coming from these columns here. The URL is just a very simple custom column in Power BI where I'm just saying, because as we discussed, the structure of the link is always the same. So I just concatenate the static URL, Reuters.com companies, then add the variable, so whatever is the current ticker or company, I'm adding that into, so Reuters.com adbe.oq, and then I'm adding the financials at the end, and that gives me the link that I then can click. So this is the core table, but if we look at this now, let me just make this a little bit bigger again. So where's my magnifier? It's been hiding out somewhere and I can't see it. Let me just open it again. So here's my magnifier. Let's make this a bit bigger and have a look at what we're doing here. So the relevant one here is I'm having a table with the tickers that I want to. So I mentioned before, so come back, why is this not letting me move? So, no. So I want to do this scraping for multiple companies, and what I'm doing here is I have another table where I list all the companies, or ticker as they're called, that I want to use. So I have, for example, the ADBE OQ that we just saw in there, but also a lot of other ones. And I can then also filter them by particular criteria. So here I'm saying selection, so I've marked a few as the ones that I want to use, and this is in the group selections. I'm selecting, give me all tickers in the selection group, and go through them to retrieve the web data. So, and then what I'm doing is here, I'm getting now the source table, and I'm doing this using a function. So I'm saying now, for each ticker, get the URL with this function. Let's have a look at this function. So this function is called float URL. Looks like I have something open. I have to close this first. So this is now the float URL function. So this function gets the website. So here you see now what we had. I think I've already shown this to you. So here we get now just go a little bit to the left. This is moving very much. So here you see now what I'm doing. So the web page contents, what I'm doing now is concatenating the path. So I'm saying here relative, with this kind of syntax, relative path is companies and the ticker symbol name, and then a part at the end, financial. So this is the way this URL is constructed. So I have Reuters.com/companies/ whatever the ticker symbol is, and this is what I'm looping through. So for example, ADOBEOQ, and then financials. So what this function is doing is, for all tickers that are coming from the previous, that are called from the previous query, it gets the web page and brings back the result. And then what I'm doing here is then a few transformation steps. So maybe let's look at this from directly in Power Query. So maybe I'll make this a bit smaller. This is getting a little bit large. So this was my function. That expects two parameters. To be honest, I'm not using URL. So this is static because it's always going to Reuters. But again, if you want to, for example, access multiple providers, then you could use this URL. What we are calling, so you saw before, we're looping through all the tickers in a list. So I have a list of tickers, which is this table here, where I have the 3 companies that I want to filter here. So I filtered this on selection. This was a criteria that I had in my table. So I have here a big ticker table that has 5,000 tickers, so 5,000 companies that are listed on the US stock exchange. But I'm only doing this for 3. If you do this for 5,000, you will very likely fail, because what I have to really also tell you is, as much as it's great that you can do this technically, retrieve multiple companies, sooner or later these source providers will stop you, because they have protection mechanisms in place. When they believe somebody is taking their data and does this in an automated way, they will stop you. And I tried it already. So if you going to more than 30 companies, the whole thing will fail, because then you get a message the extension was forcibly closed because the providers, in this case Reuters, will cut you down. So you have to view all this with a bit of a grain of salt. It depends on the data source. If you have sources that are non-commercial, that don't have these kind of protections in them, then you will be fine. But obviously these commercial data providers have no interest that you make it, that it's easy that you download all their data. So in this case, all the financials of 5,000 companies in one go. So technically, the approach that we're showing you here works. Practically, it is unfortunately not possible that you can download all their data in one go. So this is what we're doing. So we are calling the function to retrieve the web page, which is essentially the web page that you saw before. I think I'll put this back to normal size, otherwise this gets a little bit tricky to navigate. So to get the data from this page, so for the 3 companies, I'm looping through the 3 different companies, Microsoft, Adobe, and McAfee. get this from this page, and then do my transformation steps. And maybe let's just quickly go through them. So you see here, the first one is I'm getting the data. So I'm getting the data. So this was the initial one with the ticker. So this is what I'm looping through. This is the selection that I had before in my ticker, the 3 companies. This obviously can be as long as you want, or it can be as long as you want, but the question is if it will execute, but you have the option to have it as long as you want. And then we're doing something important. So we are removing errors. And again, this is something that you potentially have to write yourself. So because particularly with these web sources, if you get errors, then a lot of the next steps will fail. So it's important that you remove the errors as quickly as possible. So for example, if you start querying with a particular ticker from this link and the site can't return the financials, for example, then the whole thing will fail. So it's good that you put in an error check here and say if this when I'm fetching these URLs, if this resulted in an error, then filter this out. So I'm initially fetching with my function, so with the URL load function. So I'm fetching all the for all the tickers, but then I'm filtering out what has errors. Then what I'm doing is I have to do a few steps. So I have to add a column to identify what company is it. So we can't see this here now, but in the data, maybe if I cancel this quickly, if we see the final result, I need to obviously identify my data is with what company is it. So you see here I'm getting this from the source URL, from the writers table, but then I'm adding a column because I'm not getting this from the writers table because that is not part of the actual table. So I have to add, what is this company? And I'm doing it that way with putting in the ticker there as a custom column. And then I'm doing transformations. So there's a few rename steps, then I'm merging it with my metadata table for to get the groupings and the signs and so on. And then very important is the unpivoting. So I'm getting the data in the source like this with the dates at the top, but obviously as a proper data model I need the dates to be a column in my model. So I have to unpivot this and get the revenue, the date, and the value for that particular period. So that's what you saw as well here in the final result. So I'm getting now, as opposed to having the date across, I'm getting the date as a column. So this is probably one of the key steps here that I have to do. And this brings us to the modeling. So in general, with nearly everything, I recommend when you do these kind of things, use a star schema. Try to get to a star schema. So in our case, we have, so that the typical case is you have a fact table that contains the actual records, and then you have the dimensions around it that give you more detail to these facts, and they are typically connected with keys. So I have then all the hierarchies in the dimension tables and the detailed information, and then the actual facts are here, and that enables effective data modeling. You're likely already familiar with this, but I just mentioned it briefly. So in our case, the way this looks like is I have two fact tables, one for the financials, one for the cash flow. This could be also integrated in one, but it's a little bit easier to understand and quicker to create as well if it's in two. So I have one for the financials, one for the cash flow, and then I have the dimensions, which is the tickers, which is essentially all the company details. Then I have the metrics. So in this case, you have two. I have the metrics for the cash flow. I have the metrics for the financials, and then I have the integrated one. In my case, this is a little bit different because I wanted to make this editable. So I have all metrics here in the one table, and this is now really a separate write-back table where I can edit all these things. And so that's that's another dimension table. In essence, this is the same. So it has, from a core content, has the same content. So that's the metrics. But here I have these editable options. The sign, the grouping, and other things. So this is where you always want to get to. And this is what we are doing here as well. So those are the key things to keep in mind. I have a function here that is called to retrieve the web content in the right format. So you really have to use this syntax here, relative path, then the variable, and then the concatenated other parts. And then this is just the transformations here that we've already discussed. And so then you get the data here, and then you can add in the main query where you get all the data, you can then add all your other things on, like what we've discussed before, the groupings, the signs, and the link. And this is really all there is. So if you look then at the report again, so if you go back, this is now what we can work with. So we have a nicely formatted table with with all the data, and we can create our reports. And then the report is then very easy, and this is all thanks to a good star schema, where I just have the group, the metric, and the company, in this case in the rows, that obviously can be as you need it. And then I have here, and this is quite important, 2 measures to allow you easy comparison. Obviously this is something that you can do or not. I think it's helpful because this gives you a relative path, in this case the relative previous year to your selected year. So I'm using here, use the applied sign, which is the key metric now. So the applied sign for all the measures. That's the current year, and the prior year is just that current year with year -1. And again, if you have a right dimension table with the dates, calendar table, then here you get nicely the prior year dates, and it's relative. So it's not like fixed in a particular column, and then that also gives me the relative variances. So what you can see here as well, I have subtotals here, and this depends now how you do it. There's different ways to do this. I'm using here a visual that allows me to do this directly in the visual. So I can add, for example, a column for gross margin that calculates the revenue plus the plus the cost of goods sold. The text is actually wrong. It should be just the revenue and the cost of goods sold. And does it this way, so that's a very easy way to define calculation, but that depends on the visual. So in this case, this is one of our visuals. I won't tell you which one. If you're interested, you will find it on our website. You can do this, but there's also other visuals that allow you to do the same thing. So no advertising here. So I'm doing it that way. If you want to, there's another way as well to do this as a subtotal calculation. So to get the subtotal of gross profit, you can do it with a DAX calculation. And what you have here, and this is the way we recommend it, is you have a report structure table that has the structure that you want with the subtotal calculations and has particular flags. For example, this one here is calculated, so 2 is calculated, 1 is a grouping as is. Then the question if it has details, if there's a drill down. So if I want to show when I drill down in my report, if I see, for example, in this case, the expenses and the expense accounts. And then what statement is it? Profit and loss and balance sheet. And so if you define it that way, you can use DAX calculations that then calculate this structure. So it will either calculate the group, which is the running total. Sorry, the running total is actually the calculation. So that this would be the running total would be this plus this plus this. And as I have the sign correct, I'm applying the sign here as well, I'm getting the gross margin as revenue minus cost of goods sold. Or if I have the sign correctly already there, then it's just revenue plus cost of goods sold. So this will calculate this subtotal. And I will also need a running total calculation that does this. We are lacking a little bit the time, so I won't go into detail there how how this DAX works, but it's not that complicated. So in my slides you have it in there, and you can see how this works. So this is, if you can't set it in the visual, you can do all these calculations directly on the report as well. While we're here at the report, so what I'm doing here is, and this is quite useful metrics for the financial analysis, I'm calculating the prior years to get to the growth rates. So I'm having here the current year and then 3 years prior. So I'm looking 4 years prior, which gives me growth rate, which is then also important, brings us to the last topic today, the discounted cash flow calculations, because that will help us to calculate the future cash flows and the growth rates. This is just a normal column visual where I'm using the small multiples for editable groups to get this nice overview of how the key groups have performed. So, but now to the last topic, to the, sorry, this is the wrong one. My camera is blocking exactly to get to the right report page, so this was the wrong one again. So here's now the cash flow one that brings us to the company valuation. So here you see now the valuation. You see I have 3 metrics here. The first one is the discounted cash flow valuation. Let's have a quick look how this is calculated. Let me just get back to the slide. So this is how you calculate, or one way of calculating the value of a company. And it's based on the cash that it produces. There's obviously, this is a science and there's a lot of things to take into account here, but I'll try to explain it as simple as possible. So the cash that a organization produces on an annual basis, and that gets discounted. So, you know, cash in a future period is less than worth than now, so I have to discount it. So it's 1 plus R, and R is the discount rate. And again, with the discount rate, it's another science. Typically, it's using a weighted average cost of capital, which is a mix of interest cost and debt cost, asset and debt cost. But again, this is a science, and this would lead us a little bit too far. So this is this weighted average cost of capital. Essentially, is the discounting factor that also includes risks, typically for stock valuations. So you use this discount rate and calculate the cash flows for a specific period. So in my case, I'm using 4, but it really depends. Normally, you know, everything after 4 years, that so much change can happen that it would be likely not that useful to do it much longer. So I'm using 4 years of calculating cash inflows, and then you have a terminal value. And again, there's now a variety of ways to do this. You can say, I'm assuming that these cash flows, these annual cash flows will continue in perpetuity, or you can assume multiples. So for example, EBITDA multiples. So what was the earnings before interest that an organization has produced? And, you know, with similar companies, how much has the acquirer paid? So I don't know, markets are producing $1 billion EBIT, earnings before interest, taxes, depreciation, and amortization, and you multiply this with however much more the acquirer paid. So those are the 2 options, and this is exactly what I'm doing also in the calculation. So I'm taking first year cash flow, next year's cash flow, which is now, I'm using here growth rate, so the growth over the prior 3 periods, the average, I'm multiplying this here, so to take into account that, you know, this company is growing, so I need to also apply a growth factor with the cash flows, and then divide this with the discount rate. And I'm doing this for 4 years. That's, in the end, it's always the same calculation. It's just that the discount rate changes, where I have the you know, the discount 1 plus the discount rate to the power 2. So this would be 1 plus discount rate to the power of 2 to the power of 3 to the power of 4. It's just a DAX Power BI function, and then the terminal value. And this is exactly what I'm doing here. So I have here, and I look at the cash flow, I have here the first the cash flow calculation, which is just, again, if you have a proper data model where the metrics is a dimension, and just saying, okay, give me the cash from operating activities, that's the one I want to use here. Again, there's a lot of different ways to do this. I'm using just this one. You could add and subtract other components here again, but just to keep it simple, I've just left it on the cash from operating activities. So that gives me that number, 66675, if I'm looking at Microsoft here. And then I'm calculating the discounted cash flows, I have to say. So if I look at this now, the same calculation that you saw before is now here. And I'm also having the growth rate, where this helps me now to calculate the growth. I'm calculating the prior year, so current year, last year, 2 years ago, 3 years ago, and then I'm just calculating the growth of these years. So this would be current year versus year before. This is year before versus 2 years ago, and then what I'm just doing is I'm just calculating the average of these three growth rates and apply them to the cash flow calculation. And this is in the end it. So here this gets me now to the 1.8 trillion for Microsoft, the terminal value of 1.49 trillion, and a cash flow in year 4 of 104 billion. So this is it from my end. I very much hope you have enjoyed this presentation, found it useful, and if you have any questions, if you're interested in what we do, please check out our website at caris.com and agility.co. Connect with me on LinkedIn, follow us on Twitter, follow us on Facebook, on our LinkedIn page, and I'm now of course also available for a Q&A session. Thank you very much, everyone.